Hey, what's up, Evie?
Good morning.
Looks like we're going to be looking at some more filters this morning.
Yeah,
I tried a lot more last night, but none of them. I don't know if you were on whenever we added the EMA filter.
yeah, that was the last part I watched.
Okay, yeah.
I think I left shortly after.
So basically, we made no progress since then. Tried out a lot of different filters, um,
Uh,
but just haven't found something to beat that little um, 60 minute EMA cross. Let's see here.
like last night, I saw that you increased the profit to drawdown to like 48. Is that still with the EMA?
Yes, that was with the EMA. I'm trying to think if there's any other difference. Let me actually look at those screenshots right quick. Oh, I added some more products to the basket. So before we only had like 25, and so I added like six more, like sugar, cotton, ultra bond, some other ones. Um, just too much to add to the scale of robustness. And it boosted the profit a little more and decreased the drawdown even more. So that's how we ended up getting that.
Yeah, that sounds like a good sign. Like when you increase the products and the profit and drawdown, well, the performance gets better.
Yeah, for sure. What's I think what's kind of odd is that they kind of I think like four out of the five that I added were like really mediocre or like negative performance. But just due to that like diversification aspect, it still added profit and decreased the drawdown. But the performance
Yeah,
on but I mean they're very odd products that don't ever have those types of setups anyways. But you know worked out pretty well. That's kind of the reason why people like futures a lot because so many asset classes for the diversification. So like even though like if you were just trading one strategy on one instrument, you wouldn't choose sugar, but when you're looking to diversify, sugar's great. Kind of
yeah.
kind of that concept.
Are futures always leveraged, or
Yeah,
can you just buy one once?
pretty sure they're all leveraged. I don't think I've heard of someone just like buying like an actual contract without any leverage. I'm sure it's possible, I'm sure you could do it, but it would take a crazy amount of capital.
How much is the leverage right now? 10 to 1 or?
So the margin is different on each contract, and then you got like intraday margin, and you got overnight margin. So like ES, for example, you can take one contract for $500 on most brokers, and then basically the required margin on each product is different. But you can like look on Ninja Trader and see the required margin for each product. Whereas like there's some products that require like, a couple of $1,000 to take one contract. It's kind of all over the place, to be honest.
Yeah, I think I'll have to read up on futures.
Yeah, I can send some links regarding stuff like that.
Yeah. Do you like if you like do like this strategy live, only this one, and let's say like you said, you buy the ES and are on like $500 margin, would you ever get called out,
And
like
yet,
margin called?
you would need more than $500 for sure, because you wouldn't.
Yeah,
If
yeah,
if you only had $500, then at the moment any swings might occur. So basically, of course, like with any other product, you have to have capital to withstand the swings in your equity.
yeah,
So like I, w- I wouldn't run a strategy that takes like one ES unless probably I had, I mean, probably a 3,000 at least $3,000 account. Probably more like 3 to 5, just somewhere in that range.
yeah,
Um, which you don't really, I mean, you don't need that much because it just really depends on the strategy that you're running and what type of drawdowns you're looking at. Because the potential drawdowns is always, what kind of merits your account size. And that's if you have a account size that accounts for the drawdowns, then that's going to already account for whatever position size you're trying to take.
see.
So our current filter is in the 1 hour bar, closes beneath the 4 period EMA, basically pre-market, indicating that we should take the opening range breakout that morning. We tried a bunch of other filters with a similar premise behind them. None of those worked, or none of them beat the EMA. So what we're going to do though is just try different types of moving averages and filters and see if those approve it. So we're going to do the price close is less, and I want to do the HMA, the whole moving average, first. Price close less than the HMA. Change it to 60 minutes. Price close less than the 60 HMA. Going to do our 2 to 10 optimization on that HMA. Make sure you hit aggregate, net profit. Pulled up what the current mini basket is. So we got less trades, less money, less drawdown. It's not really what I'm looking for. I'm gonna go ahead and try the comma, the Kaufman adaptive moving average. Forgot that the comma can't be below 5. So I'm gonna run it from 5, run it to, let's do 6 to 16. Not any better results on the comma. Do want to go ahead and try some other time frames. Forgot to do that on the HMA. So we'll go up to the 120. A little bit better, but not good enough. Go up to the 240. Same story there on the 240. Off to the daily chart. And the same story there. So real quick, I want to make sure I did something correctly. So I'm going to try to go back to our baseline. So that is interesting. So actually, the entire time we weren't using the filter the way we thought we were. Because what was meant to be used was when the 60-minute bar closes beneath the EMA on the same chart. So like if you're looking at the 1 hour chart, 60-minute bar is beneath the EMA. What actually is going on here now is how it was actually filtered. It was a 60-minute bar close, whatever that value is at close, is less than the EMA value on our 4-minute chart. So basically, whenever the breakout occurs, it says, you know, whatever the value of the previous close in the 1 hour, is that less than what the EMA is right now.
It kind of sounds like a big difference, like 4 minutes and 60 minutes.
Yeah, it's kind of, and that's why it doesn't filter out hardly any trades.
Yeah, I'm
I'm trying to,
curious how it'll do now.
well, doing it correctly, like I just did it the right way, and it was given pretty much the same results as all the other tests, just kind of subpar. But I'm trying to understand the premise behind, you know, why this filter does pretty well. But since it's the 4-period EMA on the 4-minute chart, and almost, in most cases, a 4-minute period EMA is going to be above the previous close price on the hour chart, except basically whenever the if an opening range breakout occurs and like the previous bar in the 1 hour like went down basically. So like I was telling somebody last night, filters are already, I already don't like filters a whole lot, and even though this filter appears to be doing good for us, it still needs a lot more validation without a sample test to really see if it's good, if it's worth keeping. But now we know how it's actually operating. I want to test it against the other moving averages once again. Let's go back to the HMA. Filter period.
Does there also need to be a premise behind the filter?
Yeah, and that's kind of what I was saying, is that there actually still is, because our original premise was price needs to basically be below a mean before we take our opening range breakout, so it kind of incorporates that mean reversion type. And it's still there because the close on the 1 hour still had to have been below basically our breakout level, essentially. So we're looking at seeing if price was bearish before our breakout level. It's kind of what we're looking at now. It's kind of just like a more sensitive way to look at it, because now we're not just using the EMA, like we're not using a crossover on the 60-minute chart. We're using like just the value of the close bar. So what it's like saying, like, what's the value of the close bar? Is that below where our opening range breakout is?
Yeah, I just like I was wondering what the premise behind the moving averages was, but now I know. Thank you.
Oh yeah, the premise behind the moving average was just to kind of quantify when price is going down. You know, like if
Yeah.
price closes below the EMA, that just tells us that we're below a mean, and then in hopes that we're basically gonna bounce and have like a big recovery on the day, giving us that breakout. We're gonna see real quick if maybe if the whole moving average might do any better for us. Yo, what's up, Gold?
What's up, man? Did it start at 6:30?
Yeah, for the most part, around there.
Oh shit! I thought it was 7. My
Hmm.
bad.
No, it's all good. Let's see, let's go ahead and try the comma again. No improvement with the comma. Let's go ahead and try different types of the EMA. So let's do the DEMA, and then we'll go ahead and do the TEMA as well. So it did give us better results, but it chose the highest value for the period. Just out of curiosity, I'm going to run it from 10 to 20 and see if it still chooses that 14. Okay, it did. So it's not just trying to choose the highest value, it just actually is 14, which is the default value. So gold, we discovered a boo-boo with the filter. What we thought was occurring, was whenever the 60-minute bar closes beneath the EMA on the 60-minute chart.
That wasn't happening, or?
So I changed the input value for the 60-minute bar, or to the 60-minute bar, but I forgot to change the EMA value to the 60-minute chart. So what it was actually doing is it was just taking the value of the close price of the 1 hour bar, and then whenever the breakout occurred, it was just basically asking a question like, is the close of the 60-minute bar less than the EMA value right now? Basically the EMA value on the 4-minute chart at the time of our trigger. And so that's why it actually wasn't filtering out very many trades. But then once I thought about it, I realized that it's still executing the same type of mean reversion premise, just kind of a different way of doing it. Because the close price, it's kind of like still looking to see if the close price was bearish on the 1 hour chart, and then the breakout occurs above the close price of the previous 1 hour chart, or the previous 1 hour bar.
So it's almost like a single candle reversal, like a snap reversal for the open.
Yeah, it's like kind of like you were day trading. You were just like, you saw like a bearish bar, and you're like, okay, well now I'm gonna buy the high of this bar. It's kind of that concept. So I thought that was pretty interesting. So now we're testing just some other moving averages with the same concept. And like I said, this is still subject to just being some random chance overfit baloney with this filter.
Yeah.
But once we get to testing some more out of sample stuff, we'll just compare the filter with the non-filter and see if it does well over another 10,000 trades.
Yeah, cool.
So the DEMA.
Thanks for the explanation.
Yeah, for sure.
I'll catch up.
The DEMA, the double EMA, seems to be doing better here. The catch is that I only ran the last one from 2 to 10, which I decided to make it 2 to 14 since 14 is the default value. I was like, well, I should at least include a default value in there. And then, of course, it chooses 14. So I'm going to have to do the EMA to see if it, chooses 14 as well. But we're going to test this against our baseline. set is set to 14. So here's what's hilarious. We only have 2 parameters. And after everything that we've done, the test we're about to run is the default values for these indicators. 3.5 is the default ATR and 14 is the default on the DEMA.
We're running stock.
That's why like I used to always try my hardest to make strategies with just default parameters, because like if you start off with default parameters and you have like a premise, like let's say if like the RSI crosses above 50 and above 200 EMA, like, well in that case talking more so about the RSI, but like basically if just your basic premise with default parameters does well, then you can have confidence that it's not like an overfit occurrence. And then in the future, if you want to like walk forward, optimize, or actually optimize those parameters a little bit, you're actually optimizing to actually improve something instead of just optimizing something that just to make something work, because you can make almost anything work by optimizing it. You can slap 5 indicators on here, run a test, and then it do terrible, and then just optimize everything, and then all of a sudden it does good. So I should definitely start with like as default as you possibly can. See if there's anything there, and then like once you get to deployment or something, since it's not an overfit premise, you can have confidence in maybe tweaking things a little bit.
Is there reasoning behind the numbers on default values for indicators, or is it just they have to come with something, so they've just picked that? Or
so you could read about it a little bit, but a lot of these indicators were made a long time ago, and a long time ago everybody only traded like the daily charts.
yeah,
So that's why like the default parameters on like most of the indicators is 14, because that's 2 weeks, and that was just kind of like the standard.
yeah.
Like that's just see what the average of the past 2 weeks is, and see if we're above or below, and then that was that.
Okay.
Give me 1 second. Let's go ahead and run this. Get this test going. Let's save my workspace. Just in time for the train. Just gonna, once I added those extra products, it's been taking a little bit longer. And also we have a second time frame now as well.
So with what you were trying to get us to do, which is like come up with an essay why you're making a change, like why you're adding this and how it fits with the premise. Having an accident or like a boo-boo with the EMA, but you're still getting better results. Is it something you're likely to keep, or is it like, no, we can't do that because I don't know why it's helping? Or
well, I had to try to figure out in my head like why it's working.
Yeah.
And once I kind of figured out why, I decided to go ahead and keep going with it for now.
Yeah,
But
cool.
when you when you're testing stuff, it kind of happens a lot. Like you might get results that like at first don't make sense,
Okay.
but then it just forces you to critically think even more to like, what, what's kind of making this work? Like, why would this work? How can it work? And could this be a future premise I could even build the whole strategy on in the future?
Yeah, okay. Cool.
Yeah, it is pretty interesting, a different way of thinking about it. And it's kind of a simple premise. It's like if you're using a higher time frame bar, which I like to do a lot. Actually, I love higher time frame bars because they're just so much more reliable. And so, like, if you just say something like, "Look at the previous bar in the hour chart," and then you have this other system, and you're just basically just saying that I want my trigger to happen above the previous support level, which in this case would be the close of the previous hour bar. So basically using the previous hour bar as a support line and saying that you want your, you only want to enter above that. And so the trades that we're not taking is when our opening range breakout occurs when we're below the previous close in the hour chart. And so it's perfect. It's a perfect logical reason to why that might be the case. You know.
Yes, it seems like you'd be trying to buy breakouts in a downtrend with lower lows and lower highs and stuff.
Yeah, exactly.
It makes sense. Do you ever get this is more of like a personal question, I guess. Do you ever get uh I've not got enough time in my life to test everything. There's so many books in the library, I'll never get through them all. So do you ever get like, oh fuck, there's too much to test?
Um, Honestly, I don't really think about it because I just enjoy doing it so much.
Yeah,
It's like
cool.
I need a million things to test or I'd get bored.
Yeah, cool.
But I know what you mean. You can definitely get overwhelmed and you can get you know, uh, analysis paralysis really easily. And it's honestly something I struggled with for a long time. And it's, when you're making strategies and you're hesitant to, run something or deploy something because you're like, could I make it better? Is this the best opening range breakout? Like, what if I did it on the 5 minute? What if I added this? And it just would never end. And you'll just always be analyzing and always trying to find something better and always asking the question, could it be better? And so just gotta kind of just not overthink it too much and be like, well, is it looking robust? Is it making money? Because the only point of doing this is to make something that makes money. It's kind of like the same thing with, trying to optimize. It's like you can find the best parameter that made the most money. So in this case, since we only have historical data to work with, you can create the most robust system that makes money. But just because this system made the most money during this period doesn't mean that this variation of this system is going to make the most money the next year, and so on and so forth. So it's a never-ending cycle. That's why the best you can do is just have a bunch of strategies that look at different patterns and then just manage your risk. Manage your risk, hope to make some money, and at the end of the day, when it comes to anybody's strategies, anybody's portfolios, whoever does the best is up to random chance. Joe Schmo
Yeah,
is Joe.
still
Joe.
variance built in.
Say what?
There's still variance built in.
Yeah, no matter what. Joe Schmo in his his basement could still make a mill off of buying some small cap stock, and whereas a guy at the hedge fund with 100 strategies, you see what I'm trying to say?
Yeah, totally. It's still up to chance. All you're trying to do is lean as much in your favor to be able to experience that chance and build things so you can experience that chance, like the with the highest probability, I guess.
For sure, because we don't know what's going to perform best.
Yeah,
That's just
yeah,
so we're trying to put the fact that we don't know in our favor. We're saying, okay, well, we don't know what pattern is going to do best next month, but we're going to make 10 systems so that whichever pattern does occur out of those 10 the most, is going to be our best performer, and we're going to have our worst performer, and so on and so forth. And then you could of course manage your position size in each individual one. You could trade the equity curves, trade the drawdown curves.
this brings it back around to what you were saying about um how you like systems that do have the chance thing built in with the fat tails and everything. Because if you're operating in just a random environment, then it gives you the edge just by having the fat tail part like still there and not capped off.
Yeah, exactly, and that's just amplified when you're trading a lot of different products. Like if all of your strategies have this fat tail, um, like capability, then you can just imagine if you have 10 different strategies, they're all capable of capturing those fat tails, and you're looking at 30 different products a day, like you're just dramatically increasing your chance of catching those huge moves.
Yeah, it's really cool.
And so we didn't get better results on the DEMA, and at this point, let me at this point, I really feel like we could like optimize the DEMA and get better results over our core basket, but it wouldn't really help us any, um, because you know the premise behind what we're doing here is so simplistic that I think like the other moving averages that I try out are just basically just subject to random chance to whether they do better or not, because the same premise is being executed. Um, Let me change it back. So basically, I think we've extracted as much edge already there is to be had out of this concept. Like the EMA, smoothed EMA is greater than the previous close on the hour chart. So what I do want to do though is do this an even simple. I want to expand on this concept and see if it improves the strategy. And what I mean by that is the premise behind this EMA being above the previous hour close is pretty interesting. And so what if we say, okay, the opening range low is beneath, or the opening range low is greater than the previous hour close. You could also see that with the midline as well. So the midline is greater than the previous hour close. And of course, the high was opening range. So the high is greater than the previous hour close. And this eliminates the need to use a EMA and eliminates the need to use another parameter, which I am always game for. So
I'm just a quick one. I may have missed if we talked about this, but was the original premise of the EMA trying to get a close below it to create like a slingshot thing almost, and that was like the main reversion thing where because the theory was if we have a day or two that is not great in the indexes, people just come piling back in and it starts flying the next 3-4 days. Um, did we test just a close below the previous close? Like if the close is below the previous day's close, then like activate the strategy or
no, we didn't test.
that,
We didn't test that. I'm pretty sure the EMA, like, looking to see if the previous closes beneath the EMA is gonna,
yeah, okay.
in almost all cases, probably gonna do just that.
So it's just a way to do it. It's the same thing. Or
Yeah, there might be a minor difference. Um, I don't really think it would be that much. Um,
don't worry about it. I was just wondering.
yeah, I mean, it's definitely something that we could still test at some point. Um, but I definitely want to potentially expand. Let me draw an illustration so that anybody who watches this in the future perfectly understands what's going on. Because it made me think of some different ideas for a filter. And so basically, if we have a bar, red bar on a higher time frame, and so here's the close price. We're essentially saying that after 30 minutes has passed, let's say here's an opening range on a let's see how, because it's a 1 hour, so it'd be from 7. Well, not gonna get too in depth on it, but so this will still work. So here's our opening range, and then here's our breakout. Right now we're using the EMA, so when this breakout occurs, here's the EMA, we're just looking to see, is this EMA greater than the close price? And if we are, then we're going to take that trade. So what I want to do is expand on this concept and say, well, what if just when that breakout occurs, the opening range low is beneath the close price? Or what if the opening range midline is beneath the mid price? And this even opens up more doors to say, okay, what if when the breakout occurs, we want to be the opening range high needs to be above this line, the previous high. So definitely a lot of little tiny variations here that I would like to test real quick. But first, I need to restart Ninja Trader because it's starting to freak out.
Is this changing the entry signal at all, or is it just filter?
It's just a filter.
It's just a filter. Okay, cool.
Yeah, it's so just going to give us the yes or no to take the trade. one. Yeah, it drives me nuts too, to be honest. I'm hoping their next version fixes these little bugs. Because literally, like, in the forums, people are just been complaining about it for years. Right. So let's real quick elaborate some on this premise. First, let's make sure we are back to our baseline. Don't even need to be on the optimization tab. 2.5 and 4 should be correct. There we go. Back to our baseline. So let's go to our builder and let's go to add. What we're going to say is the opening range low is greater than the price close on the 1 hour chart. Copy, remove that. Let's compile. So the opening range low is greater so which close is it going to be using? So 1 hour chart is going to be 7 to 8. Okay, so it's going to be looking at the 8 a.m. close. Let's go ahead and run that. Ooh, got rid of a ton of trades. Let's go ahead and use the, I do always want to run it on 1 bar ago. I'm just curious. Greater than 1 bar ago. kind of the same thing. So in most cases, an opening range low is beneath the previous hour close on the pre-market candle, which isn't too surprising. So let's say, which one? So opening range midline. It's greater than the previous hour close. Another case of too much filtering. We'll just move right along to the opening range high. Is greater than the previous close on the 1 hour chart. Now we got pretty much the same results as we got for the EMA, which, like I said, it's pretty much accomplishing the same thing here. Because in almost all cases, you know, that 4-period EMA is going to be at the same spot as the opening range high. So, but achieving the same result just by using basic levels instead of using a parameter is freaking awesome, and it makes me feel better about the avoidance of overfitting. So let's use the open price. The open price, the regular open is greater than the previous close. See what that gives us. We can experiment with a few more variations. So too much filtering here. Now I want to see if the opening range high is greater than the high on a 1 hour chart. So basically we have to open up, break above that previous resistance level. And if it does, then we'll look for our opening range breakout. Might do too much filtering again, but we're definitely going to find out. And now we got no trades. See if I made a mistake. Opening range high is greater than the high. I didn't choose the hour bar. Greater than the high in the hour chart. Too much filtering again. Opening range high is greater than the high. Let's go back to the low or the close. So we're going to say the opening range low is greater than price low on the 1 hour chart. Too much filtering. Opening range low. Let's see my illustration. Trying to picture real quick in this scenario of a green bar. So this is the previous hour bar. The open price is right here. So we want a tight open range that doesn't break the high, or we want a more expanding opening range that is already above the previous high. So the high is greater. So what if the high, let's do the opposite, so it's not expanding. So basically the high is less than the previous high. In which case, if we get a setup, it breaks above both the resistance levels. Opening range high is greater than the high. Too much filtering. Opening range high. Oh wait, I did greater, so it must be less. Opening range high is less than the opening range high. So before we did more of a expanding opening range. Now we'll see if a more, basically an inside bar, but we have to use another condition for that. If the opening range is inside the previous, let's just see if we use, basically turn the opening range into an inside bar. So opening range low is greater than the low. So low is greater than low. High is less than the high. So it puts our entire inside range, puts our entire opening range inside the previous hour bar.
Does NinjaTrader have things like inside bar or like bullish engulfing or anything like that, or do you have to kind of make it yourself?
They already have it, and then I have a custom indicator that also has more stuff like that.
Yeah, okay. Is it reliable or?
I like, range analysis. So I do like inside bars and outside bars, like double inside bars. I actually plan on making some strategies on those in the future with y'all.
Cool.
But as far as just like normal candlestick patterns that are supposed to like give you a trigger, no, those don't really provide you any advantage. So I've tested everyone I can get my hands on in so many different cases in the past. Bullish engulfing and bearish engulfing, three crows, three bot soldiers, morning star, evening star, hammer. I mean, there's just so many of them. None of them actually improve your trigger quality. But
you're better off just sticking with like a high or a low kind of thing.
Yeah, as far as triggers go. But like range analysis though, like whereas inside bars and outside bars that look at the current volatility, those are good patterns to potentially exploit. Like basically the like volatility range analysis type candle patterns. So we're at the one that's doing best here is still our original premise, which is just when the opening range high is greater than the previous hour close. One thing I'm curious about is if the opening range high is less than the previous high, which we found out that gives, it didn't give us better results, and we only use that for our filter. But how often does it, maybe break the high but doesn't break the previous hour bar high before, it goes back down or something? So I don't know if that happens a lot, but it'd be worth testing in the future. I'm not going to test it, it's just something that I thought about. So let's go back. So opening range high is greater than the low on the 1 hour chart. Oh, 1 hour. Remove that. Let's go ahead and compile. That should be right. Let's make sure. Nope, second made a mistake. Opening range high is greater than the close. I forgot it's the close, not the low. Greater than the 60-minute close. And now we're back to our baseline. The EMA did give slightly better results, but just for the sake of preventing overfitting, I think that's completely reliant on what the period was. There's no sense in over optimizing a period of an EMA, whereas this is executing the premise behind what's going on perfectly. So it's going to give us more realistic performance of that premise, of that pattern, which is just the opening range high is above the previous close. Simple as that. So before we move on from this, I do just want to check out the other time frame closes since we know what's actually going on now. So let's do the 30-minute close. So the opening range high is greater than the previous opening range, or the previous 30-minute close. Did not improve. We can try a higher time frame. So when it's 60, we'll do the 2 hour. Good, but not good enough. 240. Very similar results. And the daily.
If you're getting very similar results across these different time frames, that shows that it's like the premise is really robust, right?
Kind of. I mean, because in reality, this filter just isn't really filtering that much.
Oh, so it's just not true. It's not working. Like,
It's just like I mean, it did improve. It's better than not using the filter. Um, After this, we'll take the filter off to get a reminder of what our baseline was without the filter on our mini basket. Real quick, let's do the daily chart. And we got too much filtering using the daily chart, so let's go back to the 60 minutes. Which I was saying, it's no coincidence that the filter that we found works best is the one that does the least filtering. Because that's any other filter we've used is it just filters too much. It just takes out too many trades, takes out the robustness, takes out the fat tails that we get. So no coincidence there. Let's get our baseline again. So we got 197, 13,000. I'm going to take this filter off. Just get a reminder of what we were looking at. So pretty much the same exact drawdown, but increases basically our other result was increases the, you know what, now that I think about it, using the EMA might be beneficial. So EMA is just going to be it's hard to even picture why there'd be such a difference in trades, because the EMA, if the opening range high is greater than the previous close, then the EMA almost, I mean, has to be in almost all cases. But sometimes it's not. So anyways, adding the filter, as we can see, increases our profit by about 20,000. Keeps our drawdown the same. I'm just gonna have to type these metrics in. So when this is without the filter, now let's run the filter. Okay, so yeah, it improves our metrics across the board. With the filter, we got 197K, 157 PF, 13. And we already know the filter improves our baseline. However, this is, I think, just a more realistic, robust version of that filter, since we're just looking at the high versus the previous closed hour chart. So it is going to affect our baseline a little bit differently than the EMA. Whether that would be, for the bad or for the good, I'm not sure. Probably not going to be as good, because I think the EMA was slightly overfit given the period that it chose. So for example, like the 6-period EMA did slightly worse than the 4-period EMA. So there is some difference there. Let's go ahead and run this though across. Let me take off this filter period parameter, which is just awesome. Back down to one parameter, the way I like it. And that parameter is on default, so Let's go ahead and run it. That's gonna take a second.
Do you run with how glitchy NinjaTrader is? Do you feel confident running like life strategies on it, or does it just shit the bed all the time, or would you rather
Oh
use
no,
like another
this
program where
this is only while we're running optimizations and backtest.
so you don't actually use this to trade? Like if you were to take the strategy live, would you just copy paste
No, what
the
I'm
Ninja
saying,
code, or
what I'm saying is all
or
these issues we're encountering right now with Ninja,
yeah?
you only encounter whenever you're running backtests and optimizations.
Ah, okay.
Just
So it's
because,
stable when it's live.
yeah, just I mean,
Okay.
whenever you're doing, that's like with most platforms when you're running like optimizations and backtests. You know, it's really CPU intensive. Like I have some other softwares where I can run like a million iterations if I wanted to, and it would just take freaking forever to finish. But whereas NinjaTrader though would just be like, nah, it's too many. I'm just gonna crash instead. So I don't
If you
understand why
run,
you can't just like wait and then it finish eventually. What's up,
yeah, I
Joe?
think their strategy. I should say that I think it's the strategy backtester has a memory leak. So what you find is if you run a bunch of strategy backtests, it maintains
Mm-hmm.
all the graph information, and that eventually uses up all your some resource, and that's what ends
Yeah,
up crashing.
and just
So
like
yeah,
it
you
just
can
like continuously hogs it. It'll like
yeah
it'll be taking up a
use it
certain
up.
amount of resources, but those resources will just constantly increase until it's taken up all the resources possible. It's pretty whack to be honest. So that's what I'm saying. I
Is it
really hope the next version they make fixes that issue along with makes a lot of improvements. I I just know it's going to be a massive improvement whenever they release NT9. Because if you've seen how big of a jump from NT7 to NT8 was, it was just insane. And they have forums where like they like allow you to give input, and people have been giving input on just so many things for like, I mean, I don't. It's years. I think NT8's been out for probably like 5+ years. So I don't know. We
Is
can.
there a? I was curious. Is there kind of background reasoning to some of the filters you're trying, or is it more just you're trying to explore the space and see if there is a pattern that exists there based on the price action?
So normal filters I like to use are the ones I tested first, which is relative volume, relative volatility. Um, those generally are going to be a reliable filter. And then other ones are just basic leading indicators. There's nothing really scientific about using an RSI as a leading indicator. And
Chopping
then
up price action.
say it again.
I said just chopping up price action different ways, basically.
Well, it's like the whole purpose behind RSI is when it goes overbought, it's supposed to basically be predicting the price is about to go back up, so it makes it leading. And so we did try that out, but it just didn't, actually improve our results. And then the premise behind this, it's a solid premise. What we're doing right now, the opening range high is greater than the previous close on the hour chart versus the opposite.
So
It just
it
indicates
trended up
that we're.
overnight,
Say it again.
basically. It trended up overnight instead of basically going down
Well,
after
well,
after open.
since we're using the hour chart, it's just kind of looking at like the 1 hour before the market opens, and then compares the opening range high to that hour bar. Of course, we tried the other time frames, the 4 hour and 2-hour and daily. But the 1 hour is giving us the best results. You can't argue with the results. And I gotta tell them gold, and I'm telling all of y'all with these filters, they're subject to a lot more testing. Nothing needs more testing than filters do. Because filters can make or break you. But we're definitely gonna test, any more we can think of. I know Rock had, the idea of volatility being really low before the open, indicating that we're, potential might get a squeeze at the open. So any more type of leading indicators that are supposed to predict a big move, it's kind of what we need to be looking for here. But the chance we actually find it is very, very slim. So obviously if someone had a leading indicator that could predict a big move, you'd have the Holy Grail. And then whatever filter we do incorporate has to defeat random chance, because we're taking away a certain degree of random chance where we might get a fat tail on an opening range breakout, just out of nowhere for no apparent reason. And these concepts go with every other type of pattern. That's why, the way we started, we just created something that's going to get us in on every single opening range breakout, no filters, and then work on money management. Because obviously, when you're keeping things really open like that, you're subject to drawdown, which is honestly why people like to add a lot of filters. They're like, man, I want to add all these filters so that I take less losing trades, so that my drawdown is less. But all you need to make your drawdown smaller is diversify. So let's see. So just using that and not the EMA did decrease our results. So because of that, it's kind of hard to visualize. So let me see. I think this can only be the scenario because if the previous hour bar is red, then the EMA is always going to be above it. So basically not taking out any of these trades in the scenario where the previous hour bar is red. However, when the previous hour bar is green, there can be scenarios where the opening range high is greater than the close, but the EMA, due to the lag, might not give us a trade. Or actually, there could be cases where the opening range high is beneath the previous close, but the EMA is greater, still giving us that entry. So some pretty interesting things there. I think this occurrence here might actually give a slight advantage. It's saying, well, the opening range low, the opening range high is beneath the previous hour close. However, the average of price is greater than it. So there might be some value behind that filter. We're just not gonna know until we give it a lot more out of sample data and just compare it, with the filter, without the filter. But we understand how it could be beneficial. Default is 14. see if I still got it. So I thought the results on our core basket would be really similar. And since it wasn't, it made me, think more in depth of why that might be. And that's how we came to this potential outcome that I didn't actually think about before, of how the opening range high could be below the previous close when there was a green bar, but the average of price is above it, which honestly is more valuable than the opening range high because it's a smooth value. So the EMA is greater than price. I'm doing just the opposite actually. Price close on the 60-minute is less than the EMA price close 60 minutes less than EMA. Let's make sure we're back to our baseline. And we are. All right, there is that. Went through some more filters. Go through some more later on. Kind of branch off from this EMA previous hour bar concept and try to look into some other things. I don't know if you guys have any ideas for some more filters. Looks like Flare has one. Threshold level greater than prior close. Could definitely potentially give that a shot. But cool, I'm gonna go ahead and call it here, and then later on we will explore some more potential filters. Let's see.
Thanks, man.
Yep.
Take it easy.
All right, me too. I'll catch y'all later.
Cheers.